First of all, the November numbers itself and not so much respite. I mean, we've been speaking much part of this year and the numbers really haven't improved. But what has been your sense when you look at the year-on-year numbers and the kind of concerns that we've seen in this year? What is your analysis? What sense do you get out of them?
See, like we've been saying all year long, we'll have a degrowth of approximately 5% for the financial year. And more or less, we are in that direction. Like we've discussed, we've had the US-China trade war, we've had the protests in Hong Kong, the Gulf has been in a little meltdown, and then we've had our problems in India with the credit squeeze, high duties on polished diamonds and on gold. We also have had lack of any policy initiatives on SEZs, and then it's the input credit challenges that we've had on GST. So more or less the challenges for industry have remained the same, and then we've had these macroeconomic demand issues. So we are hoping as we get into 2020 that we will get some respite on the policy front come budget. At least that's our aspiration. The markets also seem to be slightly better because an election year coming up in the US, we really are, and guesstimates are that the US-China trade war, there should be some kind of settlement. So the American market continues to be robust, and even if you take Signet's result last quarter, they've actually seen a growth after 3-4 quarters. So that's been the good thing. And when you come to China, we still have issues which we have to deal with, but I guess the industry is moving forward from there. And India will be in a better place for sure in 2020. So having said that, industry is looking forward to coming back to at least the same number next year.
Colin, when it comes to Hong Kong, how bigger is it market for India and what have been your losses on that one?
See, Hong Kong as a consuming center has never been a very large consuming center.
Okay.
But having said that, its importance in terms of trading for our industry is very high, because it's a port through which gems and jewelry are exported to mainland China, to all the Southeast Asian countries, Malaysia, Indonesia, Korea. So Hong Kong's been extremely important from that standpoint. So, a big chunk, nearly 25-30% of our exports are routed through Hong Kong to other countries in that part of the world. So with this entire protest and schools closing down and unrest, customers which used to come there from different parts of that region have stopped coming. So it has had its impact, and we are hoping that there is a resolution soon over there, because it's an extremely important part. And it's not so easy, I guess, for the industry which has been established there for many, many years to just move, say, their base to Dubai or Singapore or one of the other trading cities.
Colin, I want to come back to the export numbers yet again. And when you look at the gems and jewelry sector exports, we are down 4.5% for the month of November year on year. The cut and polished diamond exports are down 25%. The gold jewelry export is down nearly 22%. Which of these sectors or the numbers bothers you the most?
Actually, the cut and polished diamond drop probably bothers us the most. While there is a drop, and it's not so good for the industry in terms of employment, in terms of its leadership position globally, the only positive sign in this drop is that the excess inventory which was in the pipeline, in the midstream, has gotten cleared. With season in US, China, Gulf, India, Europe, we all believe in the industry that this Christmas especially, a lot of inventory will be, I guess, cleaned up, for lack of another politically correct word. And with rough imports also down, people have cut less diamonds. So going into 2020 with reduced manufacturing, reduced rough, with the pipeline getting much more healthier, we expect profitability to come back, which is good from, I guess, just from credit standpoint, from the industry's health standpoint. So while volumes will be down, profitability should be back in 2020. So that's a good sign for the industry.
And the silver market, Collins, clearly seems to be shining better. I mean, suddenly, as you would say, that the silver medallion has gone better than the gold. How have you seen the silver market? We've seen silver imports continue on the stronger side. Not so much sense in the sense of prices, because as I was collecting data from various global banks and brokerages, while a lot of people are bullish on gold and jewelry, not too many are bullish on silver. But then even then, the silver consumption in the Indian markets has been quite strong.
Silver consumption has been strong. See, silver, if you notice, the base was very low. You know, our total exports were around 150, $200 million totally as an industry. So on a low base, we have a high growth, and it's very good for our industry because it's labor intensive. There's a huge market for silver globally. Traditionally, this is a part of the business where China and Thailand were stronger than India, and India is playing a little catch up. So in terms of future potential, we all as GJEPC, as the industry, see a huge potential in silver jewelry exports and in synthetic jewelry exports. So, you know, that seems to be a growth area for the industry, which is good. You know, at least we have one more sector which is flourishing. So.
Fair point. Final question, and what is your sense now for 2020? How do you see the businesses, and what sector would you want to work upon the best?
So in terms of to cut our industry down into the several segments that we have, in terms of cut and polish diamond, I already told you, you know, the rough imports are down, profitability should be back on the lower volumes. So we do see the industry getting healthier in 2020, which is good. In terms of gold jewelry and SEZ especially, we are hoping that this policy initiatives which the government has assured us would happen very soon. And if that happens, then we should see some kind of growth coming back. I think double-digit growth coming back, at least on the studded jewelry and the gold jewelry side. Silver, we have a low base, so we only see growth going forward. Another new segment which is growing and has grown very nicely this financial year is the lab-grown diamond front. So we definitely see that vertical also growing exponentially in 2020. So having said that, overall as an industry, we've had a 5% degrowth. We hope that we come back to 5% growth over our base. So all in all, with these green shoots and growth happening, profitability coming back, 2020, second half onwards especially, should be much more healthier than what it was in 2019. And I can definitely say this with a little confidence towards the end of the year that the worst is over.